In year 2019, I made this couple of videos on criteria to become a full-time trader. And now in year 2024, that means after 5 years, I'm making another video on 5 years of full-time trading, 5 lessons and 5 mistakes. That means 5 years back when I uploaded video, that time I was just starting as a full-time trader, and now I've already completed 5 years of my full-time trading. And what I learned in these 5 years as a full-time trader, what are the 5 learnings or 5 mistakes I learned in this last 5 years of full-time trading, that I'll be discussing in this video. Also, I'll be discussing about which strategy I think work very well, which method of trading can work very well. Everything will be discussed in very detailed in this video. So if you are one among those traders who started your trading journey around the same time when I started, and you could not succeed and you went back to your regular 9 to 6 job, then don't get disheartened. Remember, you are not the first one, because in my case also I failed 2 times in my earlier attempt to become full-time trader. That was first time in year 2003. I quit my stable job to become a full-time trader, and within 6 to 8 months I lost everything. I miserably failed as a trader, and I came back to my regular job. And people started mocking at me because I was telling everyone that I'm going to follow my passion, and I failed. Again in year 2011, I quit my stable job to become a full-time trader. Again I failed. Again I came back to my regular job. Again people started mocking at me. So 2 times I failed earlier, and in year 2019, finally I was as a full-time trader. Now in this year 2024, I completed 5 years as a full-time trader. So what is that special thing I've done in this attempt compared to my earlier 2 attempts? What is that new strategy, or what is the new method, or what is the other things I've done, so that in last 5 years I did not have to go back to my 9 to 6 job. I did not have to wait every month end for my monthly salary. I did not have to salute any bosses or any managers. In last 5 years, I lived my life on my own terms, and that is called financial freedom. So what are those 5 things which I could not do in my earlier attempt, and that I'll be sharing through this video. And now the first lesson which I learned this time, which I could not learn in my earlier attempt, that is, if you want to become a full-time trader, then along with the trading income, you have to have an alternative income. That means you have to have a backup income. Why it is important? Important is trading is very stressful profession. When I was working in sales job, I was thinking that sales job is the most stressful profession. But being a trader, I can say that trading is the most stressful even compared to any other profession. Why trading is very stressful? Because in trading there is no consistent income. When you are working 9 to 6 job, you have consistent salary every month, and you will get your salary in your account. But in trading there is nothing like monthly salary. There is no like consistent income. Some days you may make profit, some day you make loss. Some days consistently you make profit, some days consistently you make loss, and that makes trading as very stressful job. So how to overcome this stressful job so that you can trade peacefully? So that is why you have to have an alternative income or a backup income, so that when you're trading, you're not stressed. You're not under pressure to make money in every trade. That is the first learning which I did not learn in my earlier attempt. So what I mean by alternative source of income, it can be anything. In my case, once I became a full-time trader, I opened my YouTube channel. After that, I started conducting online webinar. I started training people on day trading, and through my YouTube videos also, I was consistently making videos. I was generating good income from YouTube and through my online webinar also. So that helped me in my trading journey, so that I did not have to depend only on trading profit every day, because I had other source of income which was also helping me. For example, look at this. Larry Williams, one of the very famous trader. He is an American based trader, and if you go to his website, you can see that even though he is very famous and successful trader, still he sells his course. You can see that there is a course called Larry Williams Stock Trading and Investing Course, and if you click here, it will cost $995. And the next one, you can see that Mark Minervini, he is also one of the very famous trader. He is the one who has written the famous book, that is the Think and Trade Like a Champion. And if you go to his website and you can click on the workshop, you can see that even he conducts workshop like 4 days workshop, 5 days workshop. And even if you go to the services, you can see that he also have the monthly subscription plan for $999, where he gives the buy and sell alerts. Then Jack Schweizer, one of the very famous trader, who has written that famous book called Market Wizards. And even if you go to his website, and you can see that he is also, being a very famous and successful trader, still he is selling his books. So that is what I was telling you, that being a trader, there is nothing wrong selling your services like books or courses, and there is nothing wrong in earning more in training than trading. You know that even though they are successful trader, still they are conducting training, online coaching, mentorship, subscription, selling books. Why they are doing it? Because they also know that along with trading, if you have some alternative income, some backup income, that can help you to trade peacefully, so that you are not under stress while trading, because trading has to be done peacefully, and having a backup income or alternative income can really help you in that. And the next learning which I learned in this attempt, which I could not learn in my earlier attempt, that is, focus on only one system or one method and master it. In my earlier attempt, one day I was focusing on indicator, another day I was focusing on some other method. Like that, I was not focusing on any one type of method or one type of system. So that is what the mistake I was doing earlier. But this time, in my this attempt, what I have done is I focused on only one method of trading, and that method of trading is price action method. That means with my 5 years experience now, one thing I can confidently say, that no indicator, no option chain, no open interest analysis, no methods can work better than price action. And if you ask me, in the price action also, which I focus more on, I say that focus more on supply and demand, because that is what I've seen. Irrespective of any instrument, supply and demand levels can work better than anything else. Because after all, trading is all about buyers and sellers. It's all about psychology between buyers and sellers. And supply and demand is nothing but psychology between buyers and sellers. Now, what is supply and demand zone? Supply and demand zone is observing the candlestick, either it can be green candle or red candle. If it made any big wicks upside or downside, if it made a big wicks here, that means there is a strong supply zone. Many sellers are sitting here, that's why they push the price down. And if you see a big wicks on the downside, that is the demand zone. That means big numbers of buyers are sitting here, that's why they push the price. That means waiting for price to come to either of this level. That is what, just in a simple term, what is supply zone, what is demand zone. Now, for example, let me show you on the real chart how to identify supply and demand. Let me replay this candlestick. I play the first candlestick on 19th of December, and you can see that this is how the first 5 minutes candle formed. So what you can see on the candlestick, you can clearly see on the candlestick, this is the 5 minutes candlestick. This is the level where it made a big wicks. That means price did not go above it, rather price reversed and closed here. So that shows that there are a big number of sellers are sitting here. That is why they push the price down, and that is called supply zone. And once we observe the supply zone, then what we should know, that means on this chart, this is the level, there is a strong supply. That means that is the place where taking a short trade may be high probability trade. So now let us replay the candlestick and let us see what happened. So you can see that price 2 times went to the same level, and price again third time price came and took the resistance, and for the rest part of the day price could not break that and go above it, and finally price started coming down. So that means this is the supply zone. So every time price came here, that was the level where best place to take a short trade. That means selling those level would have been high probability trade. So that's it. Supply mean place where there are higher number of sellers compared to higher number of buyers. And next, you may ask me that which system really worked for me, which is my favorite system. And you must have guessed it already. My favorite system is option selling on expiry day. Most of my trading profit came from selling option on expiry days. Selling option on expiry day have a high probability of winning But I'm not that typical option seller who sell far out of the money option, single digit option, thinking that it will become zero. No, I would sell options based on price action. That means once I observed where is the resistance, where is the support, when price comes there, then I sell at the money or slightly out of the money option and keeping stop loss. That is what worked for me. So my favorite system has been option selling with stop loss. But based on supply demand, instead of option buying, option selling can give you that additional layer of edge. Why I'm saying that option selling based on supply demand can work better, let me show you on the chart. Okay, now let me take the same chart, that is 19 December chart, and let me explain why I was telling you that even though you follow supply and demand, then rather than going for option buying, most of the time option selling will be better. For example, look at this. This is the supply zone which we already marked, right? This was the supply zone. 3 times price came that level and then started going down. Now, what is the strike price? Strike price is 24,000, right? So 24,000 was a strong resistance in Nifty. Now, once you have identified, then when price comes here, what you can do is, if you are an option buyer, you will buy put option, right? And if you are an option seller, you will sell call option. Option buyer will buy put option expecting price to go down. Option seller will sell call option expecting price to go down, right? Now let us see what happened, whether option buyer made profit or option seller made profit. Before that, let us see what time price took the resistance. One is 940, once is 955, and next is 1135. Okay, 3 times price touched that level. So we'll take the example of 1135. Assume that 1135 you have taken a short trade thinking that that is the resistance and price will go down, and exactly price went down. First we'll look at the put option. This is the put option, and 1135 it was trading around 72 rupees. So assume that you have taken a entry at say at around 72 rupees, expecting from here it will go up maybe 130 140 and you make a good profit, because that was the resistance and you bought a put option here. Spot chart, Nifty started going down, right? 1135 onwards, you can see that Nifty went down. But had you made a profit by buying the put option? No, right? Because your entry was somewhere here, and after that, instead of going up, it closed somewhere at 50. So that means you made a loss, right? You will make a profit if it goes above 70, but instead of that, it kept on going down. So you made a loss here. Now what about the somebody who is the option seller? Where is the 1135? 1135 is this candle. Assume that somebody sold that option at 50 rupees because he's the option seller. So he sold that call option here at 50, and by 3:30, can you see that 50 rupees became zero, right? He made a profit of 50 rupees, option seller, by saying call option. But another trader who bought put option at around 72, he made a loss actually, because finally it closed around 47, 48. So that is what known as option selling have a edge. But if after taking resistance, if it started falling like this, then yes, buying put option can give big profit. But every time it doesn't happen. Resistance doesn't mean that every time it will go like this, right? Sometime it can stay sideways. Such time option seller make profit. That's why even though I follow supply and demand, but my favorite is option selling. So for a new trader who want to become a full-time trading, he's still confused about which system to follow. Highly recommend that focus on price action, and in price action also focus more on supply and demand. And another thing I want to tell you that in my 5 years, I not seen any methods, any system working 100% of the time. Everything is a probability, but you should only look for the method which can work most of the time. And that is what I have observed, that supply demand is something can work most of the time. Third lesson what I have learned in this 5 years, keep refining or modifying your strategies or your system. Why I am saying is that that earlier it was one expiry in a week, then it became two expiry in a week, then it became daily expiry. Now again we are back to two expiry in a week. So regulatory rules can change, because regulatory, when they come with any rules, it is for the betterment of retail traders. You have to accept the regulatory rules, but only thing you can do is refine or modify your strategy. Just I'll give you some example, because you know that from last few months, once everyday expiry started, market was very volatile, right? there were many sudden spikes, many sudden injections, and many people started complaining that their stop loss getting hit regularly. So how you can trade in such kind of scenario? Let me show you on the chart. Okay, once everyday expiry day started, many traders started complaining about sudden spikes, sudden injection in the chart. That means, for example, look at this. This is the 4th December chart in Nifty. You can see that initially it was trading quietly and suddenly one big bearish candle came and suddenly it made a suddenly V reversal. This is what happens. Many people get trapped in this kind of candlestick because it doesn't give any indication that it did not broken any support or resistance to make it a big bullish or bearish candle. It's a sudden spike. So how to take advantage of it? That is the one which I discussed in my updated 25 day trading strategies course, where I've shared it with my students that you should take advantage of that kind of spikes. That means whenever you see this kind of spikes on your chart, that means it is created by big boys. It is created by big boys. Big boys mean people who have big pocket. That means big players. So I said whenever you see this kind of chart, then mark that level on your chart, because if price retraces back to that candle, most of the time you can expect a reversal like this. So don't you think that this kind of spikes, this kind of sudden injection is giving you indication and you can take advantage of it by taking a short trade at the high of this kind of red candle? Another thing I was telling my students that when you think that there is sudden spikes in Nifty Bank Nifty, then there is no need of trading only Nifty Bank Nifty. There are other instruments. For example, look at this. This is the crude oil chart, and look how nicely price action works even on crude oil. You can see that there is a resistance here, there is a resistance here. Then finally this resistance was broken, and then again it made a resistance. Again the resistance broken. So you can see that how nicely crude oil also can work. For example, there is a support here, and when price came to the previous support, it made a big bounce. So that means this support resistance supply demand, it is not only applicable on Nifty Bank Nifty, it is applicable on other instrument also. Like you can trade in crude oil. This is the crude oil chart. Also, if you want, you can trade in gold chart. This is the gold chart. You can see that how nicely it is making a strong base here, and this candle made a breakout. You could have taken a short trade. After that, again it is making some consolidation, and again this level is getting broken. Then it is making a consolidation, and again this candle is breaking. So you can see that this support resistance supply demand can work very well on commodities also, like gold, silver, crude oil and all this. So that is what I was telling my students when they were facing issues in between with sudden spikes, sudden injection. Change the instrument. You can start trading commodities also. Commodities also have good liquidity, master supply demand, but you can trade in any instrument. And next issue, especially option seller expiry date traders face this. Earlier it was everyday expiry, Monday to Friday. Now it has become 2 days expiry. From January onwards, it will be Tuesday Sensex expiry and Thursday Nifty expiry. Now, being a option seller, how still you can take the advantage of 2 days expiry in a week? Let me show you on the whiteboard. Okay, you know that earlier it was 5 days expiry per week. Every day was expiry, but nowadays it is 2 days expiry in a week. But from January onwards, it's going to be different days. That means from January it will be Tuesday Sensex and Thursday it will be Nifty. So many of expiry day option seller must have got upset that now they have only 2 days, unlike earlier 5 days. So for that I will tell you some suggestion. Now, even though there are only 2 days in a week for expiry days, you can make it as a 4 days in a week. How to make that 4 days in a week? So what I suggest is that Monday and Tuesday of every week, you can trade Sensex, and Wednesday and Thursday, you can trade in Nifty. So the day when you are trading expiry, that is called 0 day to expiry. 1 day before the expiry known as 1 day to expiry. Okay, so that means in Sensex, you are trading 1 day to expiry here, and Tuesday you are trading 0 day to expiry. Same thing Nifty, 1 day to expiry and 0 day to expiry. Now, what is the advantage of this 0 day to expiry and 1 day to expiry? The advantage is 0 day to expiry, theta decay will be more, and you know that all out of the money option will becomes almost zero. That is what the most of the time get attracted to option selling on expiry day because all out of the money option becomes zero. Now, what about 1 day to expiry? 1 day to expiry, option will not become zero. Okay, option will not become zero. But the best thing is that 1 day to expiry, it will not have theta decay, same like day to expiry, but still there will be theta decay on 1 day to expiry because only 1 day left for expiry. But one thing is that you have to carry forward the position if the trade goes in your direction. That means it's a overnight trade, you have to hold it. So in that case, what I suggest is, in that case, you can go for a credit spread. Go for a credit spread for 1 day to expiry. And another beauty of 1 day to expiry trade spread is the risk reward. 0 day to expiry, most of the time you must have seen that risk reward is not good. Okay, not even 1:1 you will not get many times. But when you're trading 1 day to expiry in credit spread, risk reward is most of the time good. Even if you get 1:2 also, it's very good credit spread because you have limited risk, right? So that is what the one of the suggestion. That means you can trade Monday and Tuesday Sensex, and Wednesday, Thursday, you can trade in Nifty. So overall, by doing that, you can have a 4 days kind of expiry, though 2 days or 1 day to expiry, but still most of the time there will be theta decay, and you can go for a credit spread where you can get very good risk reward also. And the fourth lesson I learned is, before mastering the market, master your mind. So that means whatever the strategy, whatever the methods you trade, until you master your mind, then you can't master the market. That means every trading have a probability of 50% of winning or 50% of losing. That means either it can go in your direction and hit the target, or it can hit your stop loss. Like how it is not possible to win every trade, it's not possible to lose every trade also. I'll give you this example of 2 rupees coin. You can see that one side head and one side tail, right? So when I toss the coin, suppose 100 times, do you think that every time it will fall head? No, right? Do you think that every time it will fall tail 100 out of 100 times? Not possible, right? Every time I toss this coin, it has a 50-50 chance of falling head or tail. Same way in trading also. When you take the trade, it has a 50% of probability of either going in your direction or going against your direction. So that means even if you close your eyes, don't look at the chart, just punch buy button and leave it. Keep the target, keep the stop loss. It has a 50% probability. And that is what the trading is, because every outcome is random. So every outcome is random. Then why still people, they blow up their capital, blow up their account, when closing your eyes and taking the trade also have a 50% of winning rate? And the reason is, you keep fighting with the market, keep taking revengeful trades, don't do the proper position sizing. And that is the reason why I failed in my earlier 2 attempts, because I did not know anything about risk management, position sizing, trading psychology. I thought I just need to have one strategy and I can make profit, but I was wrong. So this time I learned that there's no strategy works 100% of the time. Every strategy is a probability. So look for the high probability strategy, keep the stop loss, and when you take the trade, do the proper position sizing, so that remind yourself when you take the trade, this trade I have taken as per the position sizing, which is maybe 1% of my capital. If that stop loss hit, this is what maximum I'll lose. I can't lose more than that, and that is what made me peaceful in trading. And that is what known as mastering your mind before mastering the market. And the fifth and last one is, full-time trader doesn't mean you have to trade full-time. Don't trade every day. Even I don't trade every day. That means trade only when you see the proper setup. I already discussed about nothing works better than supply and demand. So that means irrespective of any instrument, for example, it can be Nifty, Bank Nifty, Sensex, or it can be crude oil, gold, silver, any instrument. Supply demand can work on any instrument. Go and mark those levels on the chart and put the alert and wait for the price to come to that level. Trade only when price comes to such levels. Other time you can pursue your passion or do something which makes you happy and also which can help you in your business. For example, this year I have taken a very limited trades compared to my previous year. Compared to previous year, this year my trades are very less. Why? Because this year I launched 3 new courses, that is the crude oil trading course, gold and silver trading course, and hero or zero trading course. And along with that, I have modified my other courses like 25 day trading strategies I have modified this year, and then my swing trading strategy course I have modified this year. Then I have modified my day trading strategy in stocks. Then I revealed one new method of trading, that is the time cycle. All this preparing courses, doing the research, doing the back testing, all this takes lot of time. So my lot of time this year went into preparing the courses, modifying the courses and all this. So that is what, even though I'm a full-time trader, but this year I could not trade much. So that means full-time trading doesn't mean that you will do only trading from 9:15 to 3:30. After that, you don't do anything. That is not the full-time trading. You can pursue some of your hobbies, or you can spend some time on research thing, or you can learn some new skills. Like I'm learning the AI, artificial intelligence. That is what known as full-time trader. Doesn't mean that you have to do only trading. So that's it, guys, about these 5 methods which I learned being a full-time trader in last 5 years. As I completed 5 years as a full-time trader, I decided I'll make one exclusive video and I'll share my experience, whatever I learned, so that it can be useful for people who want to become full-time trader or people who are already full-time trader, so that what they can expect once they become full-time trader. So that's it, guys, from my side. I'll see you soon with a new video. Until then, bye and take care.